In the last trading session of the US, all sectors were down 0.69%. You can see that information technology, financials, consumer discretionary, communication service and industrials were all hit. It was not a complete blanket of red, although the big names in tech took a bit of a hit. Healthcare and especially gold did quite well. September is a notoriously weak month, and we can see the average S&P 500 return since 1950. September is not a good month. But we need to tell what exactly is going on here. Let's do a deep dive. Markets were red, but it could have been a hell of a lot worse. What we've seen inside the S&P 500, we had that drawdown in price, but the buyers quickly bought it back up. This was also the case in the Nasdaq. Big red candle down, but bought up. What about the Dow? Also bought up. And the Russell is looking particularly good. If the Russell keeps on going like this, we would not expect September to end negative inside the stock market or inside crypto. And one of the things that we can see, this blue line is Bitcoin. Bitcoin has been retracing. It's put in a little bit of a kick up, and that's got a lot of people incredibly excited. And hey, why not? But the idea is, this is still in a downtrend, or is it? There is a relationship between Bitcoin, which is that blue line, and the S&P 500, which of course is the major candlestick pattern that you can see here. When you see the S&P 500 going up and down, we basically anticipate Bitcoin will be moving in the same direction. This is going back to 2022. If people say there's no relationship between the stock market and the crypto market, perhaps show them this chart. Therefore, the question, is the S&P 500 actually weakening, or is it getting stronger? We can see that little blip right there. That's the past price days action inside the main markets. It certainly came down, but it was bought up. But this is a very, very short-term downtrend just at the moment. Now, is this a strengthening chart here, or is it likely to pull back? Now, if it pulls back, what is going to happen to the stock market? And what do we expect to happen to Bitcoin as well? You can see Bitcoin has already been reducing value for about a fortnight, and the S&P 500 just started to reduce in value. We saw something similar to this way back in February. Now, does this mean it's the start of a retracement? Well, just think about it this way. If you think up only and it goes down, what the heck are you going to do? Because you haven't planned for that. Now, let's flip that around. If you think down only and it goes up, what the heck are you going to do with that? Because you didn't plan for that either. So the question is, what do? We don't act as a light switch, we act as professionals. We know the price is always moving in a wave. You can see it's always coming up and down, up and down. Now, what is the predominant probability here? Well, it basically depends on if the VIX starts to spike and it continues to spike. If the VIX continues to spike, the yields are coming up, the 10-year, the 2-year, the DXY, dollar yen, euro collapsing, the Aussie dollar coming down, junk bonds getting hit. Well, we could just consider that stacking the probabilities for downward momentum. Now, will it come just like that? Will it just drop off a cliff? In all likelihood not. You can see these red candles. These red candles, they're not too bad. So what does a red candle actually mean? It just means the market is resetting. But you might say, hey Ken, that's not actually a red candle, that's a green candle. Now let's look into this, because this is pretty interesting stuff. When you look at a specific candle, what are you seeing here? What does that candle actually tell you? We were here, we opened up here in the previous day, and we closed there. Then what happened from there? Well, you can see that we opened here, came down all the way, bought back up. We don't know exactly what happened during the day inside this candle. We would have to go down to a lower time frame to figure that out. But one thing is pretty clear. we actually opened there and closed here. But the issue is we made it all the way down there and there's a big gap. Now, a lot of people will say, that gap, that's like a CME gap. That gap must be filled. And when we look back in time, those gaps too tend to get filled. But the question is always when. And the second question is why. Your trading and investing strategy at the moment should have a retracement play in play. For example, if we still come down the next day's trading inside the main markets, if we come down again, you need to be ready for that. If we bounce and fill that gap, you need to be ready for that as well. A lot of people say, Ken, I just want one direction. Well, it's a good pop group, but in terms of market behavior, let's have a look at how that works. If we go back a couple of days, we saw down, basing, then up. Now it depends when you come into the market. You could have experienced an up, you could have experienced a down if you were right there at the start, trading right at the start. Or if you were towards the end of the session, you had a bit of upwards momentum. And you can see the same thing happening here. What we've got up here is a bit of a kick up. Now, what caused this? It's our good friend the VIX. Now, how do I know that? Well, I'll show you, because I basically put the VIX inside the background of this chart and I just dim it down a little bit. Now, what this is showing us is that the VIX spiked up and then retraced. Now, is this an inverted scale? Well, how do we tell? This is a red line chart. That is a red line. That big number is on the top, little number is on the bottom. This is a normal chart. So what are we looking at here? The VIX spiked up and then pulled back. Look at this spiking. The VIX has caused the behavior inside the main markets. And remember, the US markets were closed for the long weekend. They just opened up, they saw the VIX was going nuts, and they all sold down. Understanding why something happens is wildly important. Most people just look at a S&P 500 or the NASDAQ and they don't actually know what causes it to move. That is an incredibly risky way to trade or invest. Let's have a look at the NASDAQ. Let's just check this out. Now, we're going back to April and we're looking at the NASDAQ going up and down. Now, what are we seeing right at the current time? We're seeing a very similar, just push down, but we know what caused that. And this is the beautiful thing about the CTKS method. When you look at something, you're not trying to guess. You understand what is actually going on and what causes things to move, not just in the stock market, but in the crypto market, the commodities market, and also the Forex market. That's a pretty professional level to be at. How are global markets reacting at the current time? Well, we can see they're basically in a bit of a downtrend at the current time. Now, what does it mean? Can they turn around? Absolutely. But one thing that you must bear in mind, this is a bit of a topping pattern. It doesn't mean the top of the market, but it just means a retracement is likely. If you're not prepared for retracements, if you're buying into the up-only crowd, and that's a pretty big crowd, that crowd is likely to be a retail crowd. We know that the crypto market and the main market are connected together. Now, what happened here? Bitcoin really liked that bounce back up on the NASDAQ and the S&P 500. And it's pretty much running with that. Don't forget, Bitcoin is 24/7, but the stock market in the US is pretty sleepy. It just wakes up from time to time and then goes straight back to sleep. We can see that Bitcoin is currently 111,000. Ethereum, so we've got some bit of an uptrend inside these. But Bitcoin is up 2.6%. It's really interesting that BNB is pretty suppressed at the current time. This means that retail is not flowing their funds into the centralized exchange, which is one of the world's largest. It's pretty damn good. Solana, 4.89% up, Doge, 2.3%. Now, let's go the other way and see what are the greatest gainers. We can see that Sky, Pump, Fartcoin, why not? ENA, BGB, Pengu, Dog with Hat, World Liberty Financial. We have a bit of a mix. There's not any particular type of crypto that is pumping together. We've got some memes, we've got some other things. Let's have a look on the other side. What about the greatest losers? Kronos was absolutely doing incredibly well. It came up very hard, and it's that all that green fire has burnt all the investors that put their money into Kronos. But what about Pith? I mean, Pith did really well. Look at it. It came up like hell, and it's just decayed ever since. This is why, with the CTKS method, we seek to get in before things take off. There are always signs in the chart. The reason for the market sparking up right now is literally because the shorts are getting their lunch handed to them. They're getting liquidated. Now, across the entire crypto market, there's been $355 million worth of liquidations, and the shorts are now getting smacked around. Why? Because of the main markets. A lot of people who long and short inside the crypto market couldn't care less about the main markets, and they pay the price. But as a global family, we're completely different. We are professional. We make sure that we look at the markets from an institution of one perspective. We saw that last month closed out negative on Bitcoin, but so far this month we've had a positive September. Positive Septembers are not that common. In fact, the majority of Septembers tend to be quite weak. We know it's pretty early days at the current time, so we have to be a little bit cautious about what's happening inside the markets. So if we look into Bitcoin at the current time, what are we seeing in terms of the strength of this uptrend? Is it really, really strong? Or is it starting to weaken? Is it starting to roll over? Could it be starting to find a footing and coming back? There is negative price momentum inside Bitcoin, and no alt can escape Bitcoin's gravity. So inside the crypto market as well. And you might say, but Ken, all the crypto market, the heat map is green. Yeah, that's just that little blip up right there. Of course, this is on a daily basis. Now, what does it mean to us? It means that we have to prepare for negative downside action. We at least need to be aware and to understand that is on the cards. But what if it goes positive? Well, you'll always find that price is always just moving in a wave. It's always up and down. It comes down, it goes up, it comes up, it goes down. Beware of the green fire. But there's an ancillary point to that. The red is not your enemy. It is actually your friend, but you need to know things structurally. Now, talking about structure, the structure of total crypto market cap has been released inside the service, and as well as Bitcoin and total crypto market cap and Ethereum. Total was so good I released it twice. Okay, let's have a look at total crypto market cap. We can see that total was basing up until around November, and then President Trump came in and said everything is going to be great inside crypto, and it proceeded to sell off pretty much exactly to the base. Ouch. That is green fire, textbook stuff. This is exactly what happens. Now, are we expecting a sell-off back to the base as well, which would take us down to around here? Well, not necessarily. We just need to watch the structural passes and structural failures. All this up and down price action can really do your head in, so that's why I just created a new channel, this CTKS Profit Mindset. If you enter the little @ sign and the CTKS method and you press search, of course, inside of YouTube, that will take you into the CTKS Profit Mindset channel. Now, what you would like to do from there is just go across to the playlist. The playlist has all the CTKS songs. These songs will get your mindset correct like no other thing ever could. And they're actually based on literally 4 decades inside financial markets. It is pure wisdom, not some AI rubbish. Let's check out Ethereum together. Now, we're looking at ETH's chart on a daily basis, going back into literally 2023. What I wanted to just point out to you is the red is not your enemy, and the green is not your friend either. One of the things to understand is that price is always moving up and down. Unfortunately, a lot of people get sucked in on the green fire, and the green fire is a song inside that playlist. Please let me know if you like it. And one of the things that we talked about in the last video was a moving average. Let's have a little bit of fun with this. I just put on this EMA. Now the EMA, I'll just make it a little bit bigger so you can see it. This EMA is a 9-period EMA, which means it takes the 9-period closing price. See, the source is the closing price. And it calculates the exponential moving average. Now, maybe I just do this and just zoom in a little bit. Now, if I pop it down to 1, what does it become? It becomes the closing price. If I pop it up to 2, it's averaging 2 periods, 2 candlesticks. If I pop it up to 3, it's averaging 3 out. So if I do that and I go up and up and up, you can see that the averaging of all of those candlesticks is the thing that's actually popping into this line. Ken, that's a fantastic signal. That's all I'll ever need in technical analysis. There's a bit of a problem with exponential moving averages and moving averages in general. They can't help you too much. When price takes off to the upside, it's like, where the heck is the resistance? And when price takes off to the downside, where's the support? And of course, the other thing when it comes to moving averages and just statistical measures, and I used to teach statistics at university, one of the things that you'll find, they're not very good at helping you to understand turning points inside the market. A lot of people say, just use a Bollinger Band. That's like plus and minus 2 standard deviations, whatever the hell that means. But I've heard it's really good. Now, that came from a very old concept that applied to the stock market way back when they had ticker tape machines. That was pretty much that stocks just moved to plus and minus 2 standard deviations, which is a little over 95% of the variability around price, which basically means they captured just the predominance of price inside those areas. Now, we've moved since then into real-time trading and investing, and we're looking at exponential price action. And inside crypto, we trade 24/7. So what does that all mean? Plus and minus 2 standard deviations doesn't hold up much inside the crypto market, and the stock market is increasingly the same. So does that mean Bollinger Bands are no good? No, they're fantastic. If you like them, you should use them. You just, like everything, you just got to be aware of the pluses and the minuses. I hope that helps out in terms of the exponential moving average and just moving averages in general. If they go down to 1 period, they're just the close. Okay, and they turn into a line chart. So what you can see is that when you get a big spike down, now what caused this big spike down? If you said the VIX, you're correct. Hang on, Ken, I don't believe it. Okay, well, let's throw on the VIX. So you can see the VIX spiked up, and ETH and Bitcoin and the entire stock market came crumbling down, and then it put in its peak and they said, ooh, I can go up again. Fantastic. So hopefully what you're seeing, there's a lot of intercorrelation between markets. So what happened here back in April? We had a sustained increase in the VIX, and that pushed the markets down until the VIX spiked. And when it spiked, it basically hammered in the bottom, and as it's coming down, it started liquidating all of the shorts in ETH. There were so many posts on social media and everywhere else that so many people were shorting Ethereum. That just meant they were going to get their lunches handed to them sooner or later. The markets are really beautiful in so many respects. They'll let you profit, but only for so long, unless you have knowledge. We've been inside the crypto market together for so many years, and I just can't get over how many people will look at a price chart in absolute isolation of the markets. And then they turn around and say, I don't know what caused this. I don't know what caused this. We know. More importantly, we can see it coming in advance. Which literally brings us to the cheat sheet. If you go to ctksmethod.org, you just have the homepage and just scroll down to this area, your cheat sheet to mastering price action. You can download it absolutely free of charge. What you'll find is this cheat sheet is absolutely phenomenal. It will get your mind to think in the right direction. And because if you're not thinking in the right direction, you're thinking in the wrong direction. And if you're thinking in the wrong direction, you're in a lot of trouble. Now, inside the service, we do the levels, the level 1 and level 2 standard certification across all of these charts. And I do the price paths each month. I would like to draw the curtain back and just give you a preview of what the price paths look like for Bitcoin for the next week. Members of the service will see up until the end of the month, but not just on Bitcoin, across every single one of these charts. So for example, if you're in Forex and you wanted to know the end of month price on the Aussie dollar and the paths from a positive, negative and neutral perspective, you would find it in there. And also, for example, gold. Where is gold headed to this month? Where is silver headed to? Where is copper headed to? All of those will be available inside the service. Okay, let's draw the curtain back and show you what the elite service members see just by default. We'll pop across to Bitcoin, and we've seen that Bitcoin has had a lot of interest in it. Now, we've got periods where it goes up, periods where it comes back, periods where it goes up, periods where it comes back. This is pretty natural and normal stuff, but they can be terrifying. Because if you're listening to social media, everything is up only, always up, never down. And if it's down, people are destroying their desks, destroying all sorts of things, screaming, open faces, and what the heck are they doing that for? The red is the best time to buy if you know what you're doing. Bitcoin has already been released inside the service, so you should see the September note in that particular icon. So what we're looking at when we throw the paths on, we're expecting a bit of a push up to around the 114,000, and then there's a lot of structure there, so we're expecting a bit of a retracement back to the 112. That's a positive path. Now, one of the things that you'll note, we have a positive path, a neutral path, and a negative path, and these are all structurally created. That means that underneath this price action is actually a thing called structure, market structure. A lot of people talk about structure, and what they do is they pretty much say there's structure here, there's structure there, there's structure there. That's not actually the case. The structure exists independently of those kind of movements, and that's what's a big curveball to a lot of people. What we're saying right here, there's a lot of overhead structure at the $114,000 mark. Now, if we reverse and go negative, we would expect in the next week to come down to around the 100,000 and then bounce up to the 102,600. You will find that these price paths give you a really good understanding of where the structural limitations are on the specific chart that you're looking at. And these price paths are done across all the charts inside the service. So what does that mean? I've just showed you the first week, but there are 4 weeks inside that particular indicator. And when the video comes out inside the service, they'll show the end of month prices across all of these charts. So for example, if you were in XRP and you wanted to know which direction it was going, or Doge or Solana or silver or copper or the US10, US2, the DXY, the VIX, and we know the VIX is really important. And what about the major indexes? Yep, they're covered too. It is incredibly powerful stuff. Let's do the same thing with Ethereum, and you can learn how to draw up your own 3-dimensional price paths called CTKS paths inside Level 2 standard certification. Now, when we look at the first week for ETH, we're actually going negative, so we're not going the same direction as Bitcoin. Therefore, we're looking at a daily basis up till about the first week. We could end up, if the VIX starts to spike up, around that 39.05 at the end of the week. But if we find that the VIX is not spiking up, around the 4,700 mark is where the structure starts to get pretty stiff. These particular price paths are formed by structural analysis. So in other words, we mark up the charts across all time periods, and then we look at all of that data and we create a bit of a geology, if you like, on the structural dimensions of this particular chart through level 1 and level 2 standard certification. The last thing that we do is to draw these paths on. Specifically, we're looking for structural passes on the green and structural failures on the red. The concept is not to match price exactly and precisely, although sometimes these paths do a very good job of doing that. It's really to contain price around 90% of the price movement inside the month reasonably, but no, we don't want 100%. We don't want these price paths to be up towards the moon. We want them to be tight. And we can see that last month Ethereum did a massive run up, but it just got donged on the head around that 4,700, so please be aware. The other thing to note, the structure from month to month changes when you're looking at the CTKS method. Literally, in 2 weeks, the next FOMC meeting is going to occur, and the probability of a rate decrease is currently 91.6%. A lot of people will say, oh, we don't know if they're cutting rates. Of course they're cutting rates. The question is by how much? And it's interesting that there was a bit of an inflation blowout in the EU, and that's caused rates to not be cut. But those percentages for the US we're going to see in here, so please just keep that in mind. Another thing to bear in mind, towards the latter end of the week, we're going to have a lot of very serious economic data releases coming out. For example, ADP tends to move the market around, so you must be really, really careful of this. And non-farm employment tends to do the same, so you can expect a lot of choppiness later on in the week. In other words, the VIX could go spiking up and down and all over the place. If you're looking for opportunities at the current time, gold and silver, which will be released out inside the service today in the next 24 hours, are very interesting. So please keep your eye on gold and silver. And when we're looking at the futures, the main market futures are currently moving down and the VIX futures are moving up. And the way that you can tell what the DXY is doing is to look at the euro. Because you've stayed up until this point, I want to give you some bonuses. One of the things that we can see inside Bitcoin at the current time, it's starting to get across very, very early phases of getting across this very short-term resistance level. Now, the reason that we draw this in is because a lot of people will be looking at this level and just assuming that a breakout is going to take it higher or exponential. It's only up. Now, of course, we know that's not absolutely the case. When you see any type of price action, it's generally, and this is on a daily basis, it can be a big candle followed by a lot of little ones and then retrace, so please don't get caught up. Just think to yourself, I'm in this for the long run, and that's how you need to think. Have a great day or night ahead, my friends, and if you got up to this point, please just pop in the word awesome so I know that you got here, and you are definitely awesome. Thank you for watching, and don't forget, if you've not picked up the cheat sheet, it's completely free from ctksmethod.org. And have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again inside the next video. Bye for now.